वेलकम बैक टू सिविल स्ट्रक्चर टेक गुरु यूट्यूब चैनल। इंडस टावर, जिसको भारतीय इंफ्राटेल भी कहते हैं, क्वार्टर 2 की रिजल्ट आउट हो गई है इसकी। चैनल इंडस टावर की क्वार्टर 2 की रिजल्ट 25 अक्टूबर को अनाउंस हुई थी, जिसमें नेट प्रॉफिट जो है 49% सर्च किया है। ईयर टू ईयर बेसिस में ये 1295 करोड़ हुई। 2:30 PM on 1 November 23, Indus Tower surged 5.13%, which is 9 rupees 15 paisa above the previous closing, and it come to 181.55 at around 2:30 PM when I was preparing videos. अगर आज की आप लो की बात करें तो 172.45 है, और हाई की बात करें तो 183.7 है। यदि आप 52 वीक के लेके चले तो 135.15 है, और हाई इसकी 52 वीक में 205.7 है। द कंपनी रेवेन्यू ड्यूरिंग द September 23 quarter, means latest quarter, however, dipped by 10% on year, as it comes 7,133 crores as compared to पिछला जो है 7,967 crores reported in the September 22 quarters. The consolidated earnings before interest, depreciation or taxes, amortization, EBITDA भी कहते हैं, came at about 3,456 crores, which is up 23% and compared to 2,812 crores reported in the corresponding period of the fiscal years. तो इस तरह से आप देखें तो आपको इंडस टावर में इस बार का इस क्वार्टर की जो परफॉर्मेंस मिला जुला करके अच्छा हुआ, और आफ्टर अनाउंसिंग द रिजल्ट द इंडस टावर शेयर हैज़ बीन गॉन 5% टुडे। यस्टरडे वाज ऑल्सो अप अराउंड 2%। तो इस तरह से हम देखें तो मोटा मोटी मान के चलिए कि आपको इसमें कुछ अर्निंग दे सकती है फ्यूचर में, बट इट इज़ बेटर टू बाई शेयर्स एट द वेरी सपोर्ट प्राइस। Today the support price will around 174. If one can buy at 174, then definitely it will give handsome return 10 to 15% in the future on delivery basis. रिक्वेस्ट है, यदि आप चैनल में नए हैं तो अपने लाइक एंड सब्सक्राइब जरूर डाल दें। कुछ रह गया तो कमेंट जरूर कर दें, ताकि आने वाला सभी वीडियो आपको टाइम पर मिलते रहे। उनकी बोर्ड मीटिंग की हम रिकॉर्डिंग वॉच करेंगे, ताकि उसमें कुछ क्लैरिफिकेशन भी दिए गए हैं, सभी को सुनकर के आप एक जजमेंट बना पाए कंपनी के बारे में। तो वॉच द वीडियोस।
Joining me today are my colleagues, Mr. Vikas Poddar, CFO, Mr. Tejinder Kalra, COO, and Mr. Dheeraj Agarwal, Head Investor Relations, on the call. I am pleased to present our business performance for the quarter ended September 30, 2023. To begin with, we are pleased to have further built upon our strong operational performance in the previous quarters. Driven by robust demand from one of our major customers, particularly in rural areas, our tower additions during Q2 were the highest ever. On the collection front from one of our major customers, it continued in Q2 as well. Before going into detail about the key aspects of our business, I would like to express gratitude to our teams on the ground for their commitment and dedication towards helping Indus Towers drive digital inclusivity for all. During the quarter, our team of laborers installed solar-powered towers in the Siachen base camp, which is at an altitude of 17,000 feet above sea level. It's one of the most remote and isolated regions in the country. The team is also actively facilitating the rapid tower additions in the under-penetrated areas of rural India by one of our major customers, thereby enabling connectivity for all. The government is also doing its bit to enhance connectivity in remote areas by working towards improving the backhaul infrastructure in these areas. The government remains steadfast in its commitment to facilitate the swift rollout of telecom infrastructure across the nation while keeping sustainability in view. To this end, the Ministry of Power has notified the Green Open Access Policy, and a few states have already adopted the same with minor amendments. The government is also engaged in discussions with multiple stakeholders for faster implementation of Green Open Access at the ground level. These steps aimed at incentivizing the use of cleaner sources of energy reiterate the government's focus on infrastructure expansion in a sustainable way. With regards to 5G, rollouts by the top two operators continue to progress at a swift pace, with these operators now catering to over 50 million 5G customers each. The total number of 5G based transceiver stations or BTS deployed stands at almost 340,000, with more than 7,000 BTSs being deployed per week in August. Our loading revenues have continued to increase in view of this accelerated deployment of 5G on our sites. As the network matures, we expect the demand for new sites to increase in order to aid the network decongestion. That bodes well for us given our leadership position in the passive infrastructure space. Statistics mentioned in the Ericsson Mobility Report reaffirm the growth potential of 5G. As per the report, global 5G subscriptions grew by 175 million in the June quarter compared to the 125 million additions in the March quarter and have reached almost 1.3 billion. The 5 billion mark is expected to be reached by end of 2028, with 5G subscriptions in India is also expected to reach 700 million by the same time. Also, the emergence of use cases of 5G, such as launch of fixed wireless access or FWA by major operators, will also drive the data consumption, which will need infrastructure. The data consumption story in the country continues to play out well, underpinned by continued migration of users from 2G to 4G and the swift adoption of 5G. The total data consumption across the top three operators grew by 24% year-on-year in the June quarter, and the average data consumed per user per month grew by 15% year-on-year to 22.4 GB in the same period. We firmly believe that the burgeoning data consumption in conjunction with the rapid uptake of 5G will provide a boost to the demand for passive infrastructure. Being the largest passive infrastructure player in the country, we remain well placed to address the demand. Moving on to the operational performance for Q2. As highlighted earlier, we have surpassed a record tower additions reported in Q1. We managed to achieve this despite the harsh weather conditions usually witnessed during this time of the year. Driven by continued strong demand from one of our customers, we added 5,928 macro towers and 5,583 corresponding co-locations. Total macro towers and co-locations at the end of Q2 stood at 2,04,212 and 3,53,462 respectively, which represents a significant milestone for Indus when we crossed 200,000 micro towers, each growing by 8.7% and 4.5% on year-on-year basis. Our industry-leading tenancy ratio stands at 1.73. Addition of co-locations on linear towers remained healthy at 789 in Q2, and the overall base increased to 8,643 co-locations. Including linear towers, our net co-location additions were at 6,372 in Q2 as against 5,984 in Q1. Next, I would like to bring you up to speed on the progress we have made on our four key strategic points, namely market share, cost efficiency, network uptime, and sustainability. Firstly, on market share, we are pleased to see that the digital interventions undertaken across our value chain, coupled with organizational changes to ensure a faster time to market of our sites, continue to bear fruit for us. We have further strengthened our partner ecosystem and simplified our internal processes to smoothen the workflow. The run rate of our quarterly tenancy additions has nearly doubled on a year-on-year basis, thereby helping us increase our share in the business of our major customer. We expect the rural expansion of our major customer to continue in the near term, which augurs well for us as we possess the capabilities to match our customers stride for stride in its rollouts. Secondly, on cost efficiency, we continue to take steps towards optimizing both operating and capital expenses. We have been consistently reducing our diesel consumption and recorded an 8% year-on-year reduction in Q2. Please note that such a significant reduction was achieved despite an increase in overall energy load from the addition of new sites and 5G equipment. During the quarter, we were especially pleased to have signed an agreement with IOC Finergy to deploy clean energy systems. We have agreed to deploy 300 zero-emission energy systems based on aluminum-A technology to optimize diesel consumption at our telecom tower sites. We also added more than 2,200 solar sites during the quarter and continue to convert tower sites from indoor to outdoor, which aided the overall energy cost optimization. Our sharp focus on reducing the rental cost per tower through negotiation, site selection and product selection to minimize footprint has also yielded positive results. On CapEx, our initiatives are directed towards driving cost efficiencies across processes, including designing, procurement and erection through use of automation and digital intervention. This has helped for us to build towers that are cost competitive. Thirdly, on network uptime, which reflects robustness and resilience of our system and also a key requirement of our customers, we are maintaining a high level of uptime of 99.96% despite increase in weather disruptions. Due to the changing climatic conditions, the number of instances of significant weather events in Q2 of this year were more than 1.5 times those in the same period last year. Amid the heavy rain, thunderstorms and lightning in areas of Uttar Pradesh and West Bengal, our field forces persevered to deliver such a high network uptime. On the roadmap for digital transformation, we established a connectivity solution in 4 circles during the quarter. We will use the learning from these circles to complete the implementation of real-time telemetry data system in the remaining circles. Shifting focus to ESG, a vital aspect of the business that we continue to make steady progress in. On the environment front, we continue to make strides in our journey towards reducing our GHG emissions. As highlighted earlier, our tie-up with IOC Energy and initiatives towards adoption of renewable energy solutions would help us reduce our consumption of diesel and grid electricity. Out of more than 2,200 solar sites added in Q2, 27 sites in Rajasthan run entirely on solar power. This is a testimony to company's commitment to build eco-friendly telecom tower sites by investing in clean energy solutions. The company is also committed to reducing emissions from its value chain and is working towards tying up with electric vehicle cab aggregators for its employees' travel. With regards to social dimension, the improvement in our gender diversity during the quarter was quite satisfying for us. Driven by our focused hiring programs, policy interventions and top-down approach, our gender diversity has reached close to 10% over the quarter. Ensuring the safety of our field force is paramount important to us. We have been conducting trainings and awareness programs to inculcate a behavioral change with our field force to address certain aspects such as safe driving, appropriate use of safety gear, hazard reporting, etc. We continue to evaluate our top value chain partners on various ESG parameters during onboarding and collaborate with them to improve their sustainability practices and disclosures. I would now request Vikas to take you through our financial performance for the quarter ended September 30, 2023, and I look forward to your questions. Over to you, Vikas. Thank you.
Thank you, Pachul, and good afternoon, everyone. I'm pleased to share with you all the financial results for the quarter ended 30th September 2023. Before I apprise you of our financial performance, I would briefly touch upon our robust operational performance. In quarter 2, we managed to improve upon the record tower additions in quarter 1, adding a total of 6,372 co-locations, including those on linear towers. We expect the rural expansion of one of our major customers to continue in the near term. This, coupled with the measures we are taking to improve our share of the customer's rollout, should help us continue the momentum. Now moving on to our financial performance for quarter 2 FY24. Our reported gross revenues declined by 10.5% year-on-year to rupees 71.3 billion, whereas the core revenues from rental declined by 9.3% year-on-year to rupees 43.4 billion. Please note that quarter 2 of last year included the benefit of deferred recognition of revenues arising from the settlement of old dues with our customers, which amounted to rupees 11 billion in gross revenues and rupees 5.5 billion in core revenues. After adjusting for the deferred recognition of revenue, our gross revenues and core revenues were up 3.5% and 1.2% respectively year-on-year basis. The quarter 2 FY24 revenues were impacted by the non-recognition of revenue equalization assets for one of our major customers. On a quarter-on-quarter basis, our reported gross revenue and core revenue from rentals were up by 0.8% and 0.1% respectively. Our reported EBITDA increased by 22.9% year-on-year and declined by 1.6% quarter-on-quarter to rupees 34.6 billion. EBITDA margins were up 13.2 percentage points year-on-year and down 1.2 percentage point quarter-on-quarter to 48.5%. Please note that the EBITDA figures of Q2 FY23 included an impact of provision for doubtful debts of rupees 17.7 billion. Adjusted for the impact of the provision for doubtful debts and deferred recognition, EBITDA increased by 1.4% year-on-year and was flat quarter-on-quarter. Energy margins stood at minus 2.1% in Q2 FY24. We believe that the initiatives we are taking to reduce our diesel consumption will help us improve our energy margins. Our reported profit after tax grew by 48% year-on-year and declined by 4% quarter-on-quarter to rupees 12.9 billion. The adjusted profit after tax was down by 1.5% year-on-year and 1% quarter-on-quarter. A meaningful increase in depreciation due to rapid rollouts and the change in accounting treatment of asset life had a dampening effect on the net profit. Our reported pre-tax return on capital employed and post-tax return on equity for the rolling 12 months stood at 14% and 15.1% respectively. Free cash flow for the quarter was at minus 10.3 billion, which was impacted by a combination of increase in receivables and the elevated capex of rupees 23 billion. As we had intimated in the previous quarters, the increase in capex is on account of strong tenancy additions we are seeing from the swift rollouts by one of our major customers. The company's prompt response by investing in this opportunity will yield long-term benefits for shareholders. Our receivables increased by rupees 8.8 billion during the quarter due to delay in payment from one of our customers. I would like to highlight that this amount has already been cleared in the current month. Additionally, we remain in active discussions with the customer for clearance of its past dues and are keeping a keen eye on the customer's fundraise plans. In summary, our continued robust operational performance is satisfying